All right, Danny. So yet again, another weekly recap. I first want to touch base on what we talked about in the last episode and what you were right and what you were wrong about. At earnings, you were saying that Facebook, Google, Apple, and Amazon were going to go down. What happened? Facebook was good. You were wrong on that. Apple went down quite a bit. You said this about Google.
I think Google of the bunch will do very well. Everyone's stuck at home Googling anyways, and the share price hasn't had the kind of crazy run that Amazon has.
Give yourself a nice little pat on the back. You said this about Amazon.
I wouldn't want to own Amazon, not at $2,400. That's the most likely one to disappoint investors, I think, this week.
And you were right. Amazon is going down quite significantly right now.
7% so far today. Yeah.
Yeah. Pat on your back for Danny. Good job. You got those couple ones right. So
3 out of 4 is not bad.
Yeah.
3 out of 4. Okay.
All right. So hopefully you guys got out of those positions when we mentioned them, and you're not taking too much loss right now. I want to talk about something else you mentioned in the video. On Wednesday, the market was at a high of 29.54, the S&P 500. It is currently around 28.24, and you were saying that you think around 27.25 is when you think the market could really start to head down. When do you think the market could get to 27.25?
So we're only 100 points away from it already just because of how far we're down today. So I think probably midweek to end of next week, we could be around that level. And that's where I would look for the selling to accelerate and really see us get back into probably 2,400 range around there.
Wow. Okay. So do you think we're going to reach those 2,200 numbers we got in mid-March?
Yeah, more than likely.
Wow.
Given the numbers that are coming out and just the overall just lack of clarity, especially with Apple in particular, they gave no guidance for this quarter. And the GDP numbers as well, where they weren't that bad, but Q3 GDP only took into account, I think it was about 10 days worth of actual national shutdowns. So if you actually extrapolate that out for Q2, we could be looking at GDP dropping by 20-25%. That's not good. That's not good at all for the overall market.
And something you mentioned happened. These main tech stocks, Amazon, Apple, Google, Facebook, they are so heavily weighted in the S&P 500 that it's just making everything just go down, and just it's affecting all the stocks all over the place. So, all right, Danny, let's take a look at next week's earnings report.
So these are the names that are reporting next week. I will mention that Snapchat did report already, so just ignore that one. But the big names all happen to be on Tuesday, actually, in this order here. After the close, you've got NVDA, Disney, and booking/priceline.com. For the rest of the week, there really aren't any huge names that I would really gravitate to, but I'm curious to see how NVIDIA in particular does. It's another one of these very high valuation, high P ratio stocks. I don't think it's going to do that well, considering how Intel reacted and a few other chip companies have reacted. So first off, we've got NVIDIA reporting Tuesday afternoon. Thanks to Finviz's color coding, you can see that it is a very expensive stock, 64 times earnings, 16.5 times revenue. I mean, it's not cheap by any means. I don't think it's going to perform very well. I think over the next couple of months, it will end up heading back into the low 200 range. And I don't think earnings are going to be anything out of this world going forward. This quarter may have actually benefited, as Intel did, with increased demand because people were staying and working from home more. But I don't think that will continue for the rest of the year. The second one I want to spotlight is Disney. They're going to also report Tuesday after the close, as you see here. The valuation isn't awful, but in this environment, you want it to actually be lower because there's just so much that's unknown, immeasurable as far as when they start to operate the parks and the cruises and all the rest of it again, as well as the movie industry. So I would expect this one to probably perform pretty admirably compared to NVIDIA in particular, because it isn't so overly priced, but it all depends on what their guidance is like, if they even give guidance. I wouldn't want to own it prior to earnings. I'd look to be a buyer really in the 90s rather than owning it above 100 or 104 like it's currently trading. Lastly, we have booking.com, formerly priceline.com. Valuation-wise, isn't terrible. It's a very expensive stock. The good thing is you can now buy stocks in fractional ownership rather than having to drop $1,400 for a single share of this thing. But I would also expect it to probably not do that well. If they do give any guidance, it's not going to be the best, I'd assume, just because not many people are going to be looking to travel. I'd love to own some of Booking holdings, but ideally closer to $1,000, not $1,400 like it's at right now.
Yeah, that seems a little absurd for a company that is probably not making any money at all. There's no flights, no one's going to hotels right now, and
Nope.
So
if you want exposure to that sector as far as hotels or travel as far as airfare, you're better off with a pure play and owning a hotel chain or brand, or an airline, rather than someone that only makes money with the volumes of it, because the volumes are going to be real low for a while.
All right, so how are you going to play the market this upcoming week? Keep your money on the sideline, or you're going to do a little dabbling here and there when you see the opportunity?
For now, I have primarily a lot of cash. Cash is a very good position to have when there's uncertainty and you have a market that's run up 20 some odd percent in a matter of a month. So if I do anything, it's going to be probably options to play it a little bit further away in case stocks do pull back.
Hopefully it goes down, because I want it to go down for my own.
You want stuff at a discount, right? That's the ideal thing.
I want to buy at the discount. Yes, yes,
Mhm.
yes, my friend. Thanks for watching. If you've made it this far in the video, please just give us a like and a subscribe. It helps us out a whole bunch. Thanks again, guys. Bye. You want to say anything, Danny?
Don't own Tesla. That's how I can send off.
Yeah, exactly. I think that's a good way to send off. Elon Musk saying this stock, my stock is too high, is a little crazy.
The guy that owns it, I mean, he's cost himself like $2 billion today by just tweeting about it. It's crazy.
That is nuts. The strange man that Elon is, but more power to him. I like his cars.